adopt, go to adoptuskids.org. A public service announcement from the U.S. Department of Health and Human Services. Adopt Us Kids and the Ad Council.
You're tuned in to Money Matters Boston, 1120 a.m. WBNW. This is WBNW, 1120 a.m., the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network. Winter dates fill up fast, so if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches, in crystal clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable, with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information, and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
Estate planning is about more than just deciding who inherits what. It also shapes how your assets are treated over time. And that's a key point from the estate planning attorneys at Cushing & Dolan. Without a clear plan, an estate can face significant tax exposure, as well as long-term care costs that can put pressure on your savings. Trusts often play an important role in your overall plan because they can help address tax concerns and long-term care planning, while still allowing you to retain control during your lifetime. Cushing & Dolan have put together a guide called Back to the Basics, a complete guide to an estate and asset protection plan. It walks through how these planning pieces fit together and what to consider as you prepare for the years ahead. To get your free copy, call 866-848-5699. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Protecting Yourself or a Loved One from Elder Financial Abuse. Mike, this has become, unfortunately, a growing problem in recent years. Can we give just a little bit of an idea of what we're talking about when it comes to elder financial abuse?
Well, it can run the gambit from anything from, trusted people surrounding the loved one, stealing from them. You've heard the horror stories of caretakers and things like that, or neighbors, taking advantage of somebody who has money and might not know how to manage it anymore, to, the typical online types of schemes where people are posing as the IRS or the police and taking advantage of trust in those ways. So it does run the gambit in terms of the types of frauds that you see.
What are some of the things just that people can be aware of in terms of potentially noticing this before it becomes a real problem?
Yeah, I think, a few items. One, if your loved one who is well off is suddenly nervous about money or constantly not having quite enough money in certain situations, especially if there's cash missing, that's one. I think another one is a change in behavior when it comes to talking about one's finances is another red flag that I've seen with folks, but really is trying to detect, hey, when is somebody too trusting with people out there?
Folks, our guide is titled Protecting Yourself or a Loved One from Elder Financial Abuse, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800 393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Paul Lane and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Paul Lane and Marc Fandetti.
Welcome to this Wednesday edition of the Financial Exchange. Hopefully most everyone out there listening in the New England area has shoveled themselves out. Quick check on Tucker, no longer at a hotel, right? Back home sweet home, but still awaiting power?
No power.
No power. Nope. But hopefully
we got whacked.
End of the week. Perhaps the power?
Dude, I don't know. Could be a year.
I'll continue to check in with you.
The fact that the power still goes out is kind of mind-boggling in the 21st century while AI is just making these incredible strides in technology.
It's AI's
But
fault.
we can't keep the power on anywhere. Great.
We start today's show. Markets in relatively positive territory. The big headline this afternoon will be Nvidia, who will report their earnings after the bell. We'll also have a couple other earnings reports that will be keyed on. We did get some earnings data over the last few days from some of the retailers in the home improvement space. We had Lowe's come out with their earnings, and then Home Depot earlier this week. The biggest news of the week was probably on Monday. A little-known research lab came out with a report that was sort of presenting a dystopian view on AI and what it could mean, and it just really pointed to how jittery markets can be. As after the release of that report, we saw a lot of the major indices down about a full percent. They did rally back a bit on Tuesday, but we head into today's show on Wednesday still sort of discussing the same things. And I sort of want to start the program with sort of just taking a look at where the markets sit year to date. And what's really interesting to me, Marc, is so much of the accretion that we've seen for portfolios over the last few years has come on the backs of the Magnificent Seven, and we've talked about them ad nauseum at this show. That has been really the fulcrum for the stock market growth we've seen the last few years. But this year, and granted, we're only 2 months in, so it's a small sample size, the equal weight S&P 500 benchmark out there, which has all the 500 companies equally weighted rather than the traditional S&P 500 that we talk about so frequently and how it's performing, which has weights that differentiate based on the size of the companies. That S&P 500 is overly concentrated in the big names that we talk about so frequently, the Nvidias, the Googles, the Microsofts of the world. But the equal weight index year to date is up about 6.25% compared to the S&P 500, which is relatively flat, just slightly up, close to about 1% year to date. And it speaks to this dichotomy of what we've seen in the first 2 months of the year, where we've seen a very strong earnings season for Q4, which companies in the S&P 500 have grown their earnings by 13%. That was 6 percentage points better than anticipated. Yet this market has a heavy tilt and concentration to the technology sector, which makes up about a third of the S&P 500. And then if you go down the line to some of the other more heavily weighted sectors, such as financials and communication services, which encompasses companies that are pretty close to tech. If you call, Meta and Google, they can be very closely associated with tech companies. Those are a significant part of the communication services. But you've had these other sectors like energy and materials and industrials perform quite well, but they just don't hold a lot of weight in the index, and that's where we sit today.
They will.
Maybe. That's
give it time.
That's where we sit today, where the market year-to-date relatively flat. Don't get me wrong, we had a tremendous year last year, so I'm not saying this is some huge issue, but it is noteworthy where that equal weight S&P 500 benchmark has so dramatically underperformed in years past, but this year it's actually holding its own.
Yeah, it's smaller on average, and it's more value-oriented on average. Now, that's jargon I need to stop and briefly explain, and don't let me carry on. Just, interrupt if I go on and on. If you were building a stock portfolio from scratch and there were, say, 10 stocks available in the whole world, would you buy 1/10 of each? How would you weight them? This was a question that researchers grappled with for decades. The consensus, and this is based on theory, but it's also quite practical and easy to implement. The idea is you buy them in proportion to how big they are, which is defined by the value of their stock outstanding. It's a market capitalization weighted approach. The S&P, and we say market cap weighted for short. Yep. So there's a little explanation for the jargon behind index construction for indices like the S&P 500.
And market cap, the simple way I like to explain it is, first of all, it's the number of shares outstanding for a given company times the price that gets you the
how
market
much it's
cap.
worth, right?
But how much it's worth is really what I like to focus on with clients, is just to explain that, hey, if Mark and I wanted to go out and buy Nvidia, well, the starting point should be about $4.7 trillion because that's what their market cap is today. But you better believe
But it's relative, because how much Nvidia should I own relative to ExxonMobil or Microsoft or...
Oh, I just meant if we wanted to buy them outright. I just jokingly, hey,
so
we
suppose
pair together.
we had two companies and we want to own as much of the stock as we could. How would you weight them? Would you buy an equal amount of each? That's the equal weighted approach that you cited earlier. Or would you buy them in proportion to what investors think they're worth? That's the market capitalization weighted approach, followed more or less by S&P in its construction of all its indices. We talk about the S&P 500, that's large cap, but there's a 400 for small cap, for mid cap, and a 600 for small cap, and a 1500. There's a bunch. There's the Russell 1000 family of indices. There's the FTSE, right? They all follow the market cap weighted approach, unlike the Dow Jones, which is price weighted. It's a different animal entirely. So the weight of a company in the index is not decided upon by the index providers, decided upon by us.
How big it gets.
How much we're willing to bid up a stock's price, which is in turn presumably driven by what we think of its prospects. So to bring this back to the point you made about equal weight versus, say, market cap weight, if you think about what an equal weighted index approach does is it owns less of the biggest companies.
Right.
Just it has to. So that gives it its small cap bias. Sorry, go ahead.
The size of Nvidia or the size of Lowe's or Visa or McDonald's are all equal within that.
Yeah,
S&P
you just buy
1/500th
of each.
Rather than the S&P 500, which we talk about so frequently, where Nvidia is somewhere like 7 or 8% of the whole thing there. So that's been the interesting sort of start to the year. The other sort of noteworthy piece, just tracking markets, has been how the AI trade has evolved, where it seemed like for last year, Nvidia was truly the bellwether of AI optimism or pessimism, depending on how they came out with their quarterly earnings. And it seemed like as they came out with strong earnings, it sort of lifted all boats in that sector. It seemed as if the enthusiasm regarding AI companies, all of them would move in a positive territory where... Do you agree with that?
Oh, absolutely. I want to introduce some more jargon, because sometimes you hear the term beta thrown around and people wonder, what does that mean? Well, it's the Greek letter it's the equivalent in Greek of B, and it looks like a B. What is the significance of beta? It's that tide lifting all boats approach, and you can even think of beta, B, as being analogous to boats going up. So B for boat, B for beta. The tide lifts all the boats. How much does your stock go up, whatever it happens to be, when the tide goes up?
Right.
You say it has a beta of 1 if it tends to rise 1 for 1 with the market. Market goes up 1%. IBM goes up 1%, for example. IBM actually has a beta historically of a little less than that, maybe not the best example. But anyway, tech stocks tend to be higher beta, right?
Yep.
They tend to go up by more than the market when the market goes up. And maybe consumer staple stocks, lower beta.
Right.
Less than the market when the market goes up. So just to since we're doing jargon demystification, or at least I am, today. I thought I'd mention that, Paul.
So where we sit now is that was sort of last year's paradigm where it seemed as if, hey, any positive news on the AI front, it lifted all of these respective boats in the tech sector. Where we sit this year, it has been a story much more of the sort of ciphering out of who is going to be the individual winner or loser of this technology revolution. And obviously the ones that have been most beat up most significantly is those companies that are in the software space. There is fears that loom out there that the ability of artificial intelligence to write code, to create some of these software programs that you may use on your day-to-day job or may have encountered in the past, whether it be TurboTax under Intuit's umbrella or Salesforce for your client relationship management software at work, that this new technology could be able to do that more easily. That has led to significant sell-offs in one stock or another on a given day. And so as we head into Nvidia's earnings coming out at the end of the day today at 4 o'clock, there is perhaps mentioned less emphasis on the numbers they're going to come out with. It will be interesting to see how the market reacts, but really we sit in a point in time now where it seems like on any given day, there is a tremendous amount of jitters for the market trying to look to see what direction these individual winners and losers may trend with artificial intelligence. We're going to take a quick break here on the Financial Exchange, but when we come back, we're going to be talking a little bit more about the AI frenzy and some of the investors out there that are shorting some of the big names in the AI space. That's right after this break here on the Financial Exchange.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
As you get closer to retirement, making sound decisions to protect your assets becomes even more important, especially with increasing cases of elder financial abuse. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A Bloomberg report from last September notes that older Americans are losing an estimated $28.3 billion to exploitation. Scam calls and fraud emails are issues to be aware of, but there are other warning signs that may not be easy to spot. Our new guide is called Protecting Yourself or a Loved One from Elder Financial Abuse. In it, we discuss a variety of concerns to watch out for, as well as steps that you can take to stay ahead of potential problems. Call us right now at 800-393-4001 and ask for your free guide today. That's 800-393-4001, or you can request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Winter dates fill up fast, so if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches in crystal clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable, with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information, and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com. There are many elements needed to build a successful estate plan, and if you don't know where to start, Cushing & Dolan can help. Estate planning doesn't stop with a will. Wills by themselves do not keep your estate out of probate, which takes time, can be costly, and it makes your estate a matter of public record. Many families use trusts to help protect their assets. Trusts are tools that are designed to help your assets pass privately, more efficiently, and without court involvement. Cushing & Dolan have put together a new guide called Back to the Basics, a complete guide to an estate and asset protection plan. It explains, in clear terms, how wills, trusts, and probate actually work, and why structure matters. Get your free copy today by calling 866-848-5699. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Stay informed and prepared for market changes and breaking business news. The Financial Exchange is live every day on YouTube. Tune in, subscribe, and keep up to date on all of our show's content on a daily basis. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Experience America's Caribbean and fall naturally in rhythm with the heartbeat of the islands while enjoying incredible beaches, world-class cuisine, and unforgettable sunsets. The weather is perfect all year round, so head to visit usvi.com and book your trip to St. Croix, St. Thomas, or St. John. Enjoy one or all three on the vacation of a lifetime. The USVI is America's Caribbean paradise. Plan your winter escape now at visitusvi.com. That's visitusvi.com.
Piece here in the Wall Street Journal. Skeptical investors are hunting for ways to short the AI frenzy. A little bit of a misleading headline in that when you sort of dive through the details of this piece, I don't know if the AI frenzy is being overly shorted. Some examples cited in this piece are there's a way that you can track what companies are being shorted. And again, to further the explanation on financial jargon, shorting is just basically betting on a stock to go down in value. You borrow shares with the hope that you return it and the price of it is lower than where you borrowed those shares. But long and short of it, you think the stock is going to go down. It can be very dangerous because your losses are unlimited, because a stock theoretically could just keep going up and up and up and put you in a very difficult position. Often it is utilized by hedge fund managers and other sophisticated investment firms as a hedging mechanism, or there's many different iterations that you can take with it. But this piece in particular focused on hedge fund managers who may be shorting some of these larger companies. The shorting got really popular when the meme stock rage was all that we would talk about on the markets in 21, where GameStop was an example of a company that retail investors found out was heavily shorted by some of these hedge fund professionals, and they just decided they were going to continue to buy it, and that can create what's called a short squeeze, and it just makes the stock continue to rise sort of in this meteoric fashion. The companies that we're talking about here that are mentioned to be shorted include much larger names like Oracle and Nvidia and others, but the way that you can track the amount of shorting within a company is called its short interest. And if you look at Oracle's, for example, they cite that perhaps now 2% of it as of January 30th is short. That's up from about 1.5% a year earlier. So these levels of shorting are still very small relative to the larger, shorter interest you might see on much smaller name companies out there that have much more dismal business prospects than something that is as significantly in size as Oracle. But in general, it is an area that there's tremendous amount of angst, and as a result, you do have companies looking for ways to, whether it's hedge their bets or look for potential opportunities to make a profit by shorting the AI trade. It also mentions this idea of looking for AI companies in their debt that they're issuing. So rather than buying stock in the company or borrowing stock in the company, hoping it's going to go down, also scrutinizing the idea of, the debt, shorting that as well.
Yeah, we talked earlier about the best way to build an index fund, and I don't mean best as in best for everybody. I mean best as in on average, something everybody could participate in. And we talked about market cap weighted indices. One of the reasons why they become so popular is that they're a good benchmark, not just for you and I investing through our 401k plans, we just want to participate in economic growth through earnings and stock appreciation, hopefully over time. There are some investors and investment managers out there who want to beat the index.
Right.
So you could do that by equal weighting, like you talked about in the last segment. That is a different than market capitalization weighted approach by definition, and it has the potential to outperform or underperform the market. Short selling is another way you could beat the index. There are managers who short sell, I should say, who do so to try to beat the index. So it's just another sort of tool in some people's toolkit.
Right, exactly. And again, here, I don't want to make it seem as if there is significant short positions out there, but it is a strategy that is being deployed by some of the traders out there, and perhaps could create more volatility in the space if it does increase over
like
time.
You said, a short, as interest grows, the impact of a so-called short squeeze, when the stock price starts to go up and you realize, oh my God, I have to give this security back, buy it back at a higher price than I paid, can push the price up just as we're all used to sharp drops in stocks. You can also see sharp rises, and people always point to short squeezes as being the culprit. So they could be destabilizing. The interesting question is, when you see short interest grow, is that a bullish or a bearish sign? If you're a contrarian, you think, well, the more people that are piling into this so-called short trade, the more hedge fund managers who can short and use derivatives and stuff like that, as distinguished from the strategies that most of us use. The more they're piling into a short trade, do you say pursue a contrarian route and bet against that just by buying it?
Yep. Yeah. No, all interesting components of how the market works, and neither do I. Workday guides for subscription revenue growth to slow amid AI worries. This is a company that has been catching some of the shrapnel from the software sell-off in general. I would say Workday, Intuit, as well as Gartner. Those are three of the big names that are all down 35% plus year to date. Workday just came out with their earnings and came in with lesser than anticipated subscription revenue growth. So what Workday does is they have HR systems that they will sell to companies for all sorts of things like payroll and employee headcount and just different procedures that are needed to be completed on the HR side of things. The CEO came out and said that, of course, he's going to say this, that AI doesn't loom as a huge disruption to their business, that it's oversimplifying it to just say that because AI can write code, that it's going to be able to replicate the software, the complex software and security parameters that Workday has. But nonetheless, they've been caught in the crossfire of sort of this sell-off. The stock is down about 3% today on the news that they were going to come in lighter for this year's fiscal revenue numbers, but it does speak to, again, the trend that we've seen, that in the software space, there's been almost indiscriminate selling. And probably what the case will be is that there will be some companies that will be challenged for future growth because some of the developments in artificial intelligence, but some of this is probably overdone too, where Salesforce and others have seen these significant sell-offs, but really all on the premise of new technology perhaps impacting their future earnings, but not something that is concrete by any means. Taking a look around at markets, we've got the Dow Jones up about 70 points at the moment, or 0.1%. The S&P 500 is up about 0.5%, and the NASDAQ is rallying ahead of Nvidia's earnings at the close of the market today, up over 1%. We'll have more on the market right after this break with Wall Street Watch, and also get your estate planning questions ready. We're going to have our weekly segment with Todd Lutsky from Cushy & Dolan, Ask Todd, right after this break.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Winter dates fill up fast, so if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches in crystal clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable, with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John. 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information. And get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com.
Life changes quickly as we age. Technology is moving faster and is creating new risks for families they didn't have to worry about before. One of the biggest is elder financial abuse. Hi, this is Mike from the Armstrong Advisory Group. I'm not talking just about scams, but situations where more online accounts, digital payments, and shared access can slowly open the door to problems. Today, financial exploitation doesn't always look obvious. It can show up through unfamiliar transactions, misused powers of attorney, or pressure from people who already have a role in someone's life. That's why the Armstrong Advisory Group put together a new guide called Protecting Yourself or a Loved One from Elder Financial Abuse. To get your free copy, call 800-393-4001. That's 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, what happens if you don't have a healthcare proxy in place and your spouse needs nursing home care?
So this is a basic document that we don't talk about as much as we should. It allows you to appoint somebody else to make a medical decision for you. And by the way, it's not just one medical decision. It could be any number of things, from prescription drugs to doing a surgery. And yes, the most important one, which is, hey, if all hope is lost, I don't want to, be on a machine. But that's the basics, and you do need it for that. But the bigger point is, if you enter a nursing home and you don't have one of these, you're not going to be able to admit them. You're going to have to go get a guardianship in order to admit them to the nursing home, because they're not going to allow you to do that. So very important that you have one for that. Now, guardianships are time-consuming and expensive. You got to hire a lawyer. You got to go through a lot of nonsense, right? If you have this basic document, which you should have for anyway, just for your basic purposes, having it not only for those reasons, but to help you get into a nursing home if you need to, is essential.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request the brand new guide from Cushing & Dolan. It's called Back to the Basics. 866-848-5699, or you can request it from their website, legalexchangeshow.com. Cushing & Dolan have been helping families like yours for more than 30 years. Call 866-848-5699, or request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are in positive territory as Wall Street eagerly awaits a significant earnings report from AI and chip giant Nvidia due out after today's closing bell. Right now, the Dow up about 0.25% or 114 points. S&P 500 up 0.5%. NASDAQ up over 1% higher or 230 points. Russell 2000 dipping into negative territory, mostly flat. 10-year Treasury yield up 1 basis point at 4.05%. And crude oil mostly flat, trading at $65.60 a barrel. Lowe's Beach Street forecast for its fourth quarter revenue and earnings as the home improvement retailer sales grew more than 10% year over year. However, Lowe's noted it was seeing pressure from economic uncertainty and a frozen housing market, sending shares down by over 4%. Meanwhile, computer maker HP also beat quarterly earnings expectations. However, the company warned that its annual results would be near the low end of prior guidance, partly due to rising chip costs. That stock is up nearly 1%. Elsewhere, TJX reported stronger than expected quarterly results, but guided for growth to slow slightly in the coming year. Shares in TJX are up nearly 1%. After tumbling 14% yesterday, Whirlpool stock is trading modestly lower after David Tepper, billionaire founder of hedge fund Appaloosa Management, sent a critical letter to the appliance maker's board, accusing the company of destroying shareholder value and called for sweeping changes to its strategy and leadership. And Workday shares are sinking 2% after the AI-powered workplace platform disappointed with its first quarter subscription revenues outlook, adding fuel to AI concerns. I'm Tucker Silva, and that is Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutsky is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutsky.
As we do every single Wednesday, we are joined by Todd Lutsky from Cushing & Dolan to answer any of your questions in the estate planning realm. If you have a question for Todd, get our studio line a call at 888-205-2263. Again, that number for any of your estate planning questions for Todd Lutsky, 888-205-2263. Todd, thank you so much for joining us. How are you doing today?
I am never better. And you?
Doing great, minus all the snow that we've had. But
guess what? It's snowing again.
Yeah.
Just in case you want to know more.
Never stops. Question for you, estate planning and the grind never stops either. And one question I have is oftentimes I'll talk to clients about when is the appropriate time to consider doing trust work and what age is appropriate. And you can talk about that a little bit too. But another set of documents separate from the trust side of things are sort of your what you'd call the estate basic planning documents, living will, healthcare proxy, and power of attorney. Those documents, I often tell younger folks if they're getting married, that's something to consider right away. Do you have a general framework for the considerations on sort of those basic documents versus when you go up to that elevated, more sophisticated documents of putting a trust in place when you talk to clients?
Yeah, and I think that really does strike an accord with the guide we're giving away, which is back to the basics, because you got to understand the whole process, and it's not always for everybody. So let's just take an example. Start like you said there. Let's just say you're single, no kids, just starting out in life. Well, probably have a bank account, an investment account, and a new 401k.
Right.
I'm going to say this might be the only time you probably don't need a plan. I'm going to say you don't need anything. I think put designated beneficiary on there. Like, for you, Paul, if it were just starting out, it would be, just put your probably a beneficiary, your siblings. You could put your parents, but likely you'd want to make it go down a generation, so you might just leave your parents and something simple like that. I don't think you need to go out of your way. I think then if you enter into a situation where now you're married and let's say you have children.
Mm-hmm.
So now you're still both a young couple, but you're married with children. That's a game changer.
Right.
So as soon as you have the children, I don't think it's so much the size of the estate that matters. In other words, but by the same token, you might have $1 million life insurance policy. You might have bought your first home. Those two assets alone could put you up there. in terms of the value of your estate. But it's probably not driven by that. It's just going to be all my bank accounts, all my investment accounts, my house, whatever I've got. I want to make sure now gets to my minor child or children, as the case may be. So in order for that to happen, a trust really does need to come into play. And so not so much just because I'm trying to avoid probate or reduce my estate taxes, because I may not have that much. But if I die, I don't want some person owning all my stuff. Two things there. One, yes, the will, the basic documents that you mentioned earlier, Paul. You're going to need the will, because the will now becomes one of the most important documents when it's usually not when you're doing your estate planning. But when you have a minor child, you got to appoint a guardian. And that's how you appoint the guardian, through the will.
Right.
So you may want the custody of your child to be held by one person, but I might not want that person in control of my money. So now you take all your other assets and you put them into a revocable trust, would probably be the kind you would be using at this age. A revocable trust, and list a trustee who might be different than your guardian. Make the guardian come to the trustee to get the money to take care of the child. And the language in the trust will be dictating how and when that money comes out, and the trustee will be the one making that distribution. So really a game changer when you have, that. And then if you jump ahead to just either being, let's say you've approached 60, 65, well, now you probably have more assets. You might have grandchildren, but more importantly, you might be thinking about switching from a revocable trust to an irrevocable trust, because I want to do some nursing home planning in addition to estate tax savings, bloodline planning, probate avoidance, things like that. So it's really a process. Family dynamics drive what kind of plan you do, all kinds of things.
A lot to consider there. If you have any questions in the estate planning realm, whether it be regarding trusts or some of the more basic documents or anything in the tax realm, also give our studio line a call at 888-205-2263. We'll be taking your questions with Todd Lutsky. Again, that number for our studio line for any of your questions on the estate planning realm with Todd Lutsky, 888-205-2263. We're going to take a quick break here on the Financial Exchange. And when we come back, your questions with Todd Lutsky right after this.
Ask Todd with Todd Lutsky every Wednesday at 10:30, only here on the Financial Exchange Radio Network. Winter dates fill up fast, so if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches in crystal clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable, with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information, and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com. Protecting your assets is the most important part of a sound estate plan. Cushing & Dolan's new guide called Back to the Basics, a complete guide to an estate and asset protection plan, can help. Learn how to avoid probate and address your estate tax concerns. Get yours today by calling 866-848-5699. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
As you get closer to retirement, making sound decisions to protect your assets becomes even more important, especially with increasing cases of elder financial abuse. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A Bloomberg report from last September notes that older Americans are losing an estimated $28.3 billion to exploitation. Scam calls and fraud emails are issues to be aware of, but there are other warning signs that may not be easy to spot. Our new guide is called Protecting Yourself or a Loved One from Elder Financial Abuse. In it, we discuss a variety of concerns to watch out for, as well as steps that you can take to stay ahead of potential problems. Call us right now at 800-393-4001 and ask for your free guide today. That's 800-393-4001, or you can request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
You're listening to Ask Todd with Todd Lutsky on the Financial Exchange Radio Network.
We are back in studio with Todd Lutsky from Cushing & Dolan. If you have any questions about your estate plan or trusts or anything in that realm, give our studio line a call at 888-205-2263. Again, that studio line phone number for any of your questions for Todd Lutsky, 888-205-2263. We're going to hit the phones and kick it to John in Waterbury, Connecticut. You were on with Todd Lutsky.
Hi. Does gifting avoid the 5-year look back in Connecticut?
So, that's a great question because many people confuse these two things. First and foremost, let's describe what the look back is for people who aren't aware of what it is. What I believe you're referring to, John, is the ability to take an asset and for less than fair market value, transfer the asset somewhere where the nursing home can no longer get it. And if you do that, that's called a disqualifying transfer. And yes, you have to stay out of the nursing home for 5 years in order for us to sort of cleanse that transfer and make the asset protected. Another question you asked is, does that 5-year rule apply to Connecticut? In fact, it applies to every state. It's a federal rule, not a state rule. At least there's not a state that I'm aware of that does not do it. Medicaid is a federal statute implemented by each state. So, yes, the 5-year rule applies to you. Now people know what the 5-year rule is. But I also want to take it one step further because sometimes people confuse this with the estate tax gifting rules. And I know you might not have asked about that, John, but I can't help but just educate people on it. Some people think that, well, if I just gift it away to my children, then I don't have a 5-year waiting period. But if I gift it to a trust, then I do have a 5-year waiting period. No, the 5-year waiting period applies to any kind of a transfer to anybody or a trust if it's for less than fair market value in exchange. So you can't avoid that. Number two, some people will say, oh, wait a minute, I heard that I can give away $19,000 per year per person to anybody I want, and I don't have to pay a gift tax. So if I do that, I just will avoid my 5-year waiting period as well. Mutually exclusive rules here, folks. There's a difference between Medicaid rules and IRS rules. For Medicaid purposes, you give away $1 and you have a 5-year waiting period. For IRS purposes, you're allowed to give away $19,000 and not file a gift tax return at all and not pay. You don't have to report. You don't have to file. It's just a freebie. 2 separate rules, mutually exclusive. So, folks, hope that helps a little bit in that example. But by the same token, one of the things that you can do when you're getting your estate plan together is get this guide, because folks like John that maybe are thinking about doing an estate plan, he wants to protect his assets from the nursing home. This guide, Back to the Basics, will help you kick off your estate plan, gives you questions about what to think about, like what Paul was asking us earlier, age, family dynamics, value, questions to be armed with before you get to your estate planning attorney. Talks all about the basic documents from wills to powers of attorney, and explains how, in this case anyway, an irrevocable trust happens to work. 2 of them, I put together a $4 million hypothetical estate plan and then basically give my engagement letter outlining this entire plan. Put your numbers to it, see if this guide will help you do this estate plan for you, or in any event, at least help you kick off the estate plan for yourself in one way or another. It's getting close to the end of the month, folks, so get the guide, Back to the Basics, 866-848-5699, or legalexchangeshow.com. You can download it there. Again, 866-848-5699 or legalexchangeshow.com. And for more information, go to our Instagram page, Cushing Dolan.
We're going to go back to the phones here to Sue in Mashpee. Sue, you are on with Todd Lutsky.
Hello, how are you?
Good. How are you?
Lovely weather.
Mm-hmm.
I'm calling up because I'm just trying to decide on a trust. My husband has passed away, and now it's just me.
Mm-hmm.
So I was looking at a few things. I don't like irrevocable because you lose your control. Is that correct?
Yeah, incorrect. So many people think that, so you're not alone. There are many kinds of irrevocable trusts. The kind I think you're thinking about, depending on your net worth, assuming for now you're worth less than, let's say, $4 million. If that's the case, then no. The kind of trust we would probably be thinking about for you, you actually would end up keeping about 98% control. That's what I like to tell you. But when I'm done explaining it in detail, you'd be amazed and you'd say, wow, I don't feel like I gave up any. Again, different rules for different people and different levels of net worth. So you're right. There are irrevocable trusts out there that you do lose control over and that you are more rigid. But there's also kinds that are drafted that aren't like that.
So what would be the minimum amount for this particular one that you're saying $4 million? Would it be $2 million?
No. I'd say if you have a house and you have some money and you want to protect it for your family, that's up to you. In other words, the size doesn't matter so much. It's just that if you get to a larger level, you probably don't need nursing home planning. But if you're, say you have a $1 million home or a $500,000 home and $500,000 in your investment portfolio, and you want to protect your house, it might be good enough just to protect your house. So hopefully that helps you a little. I think you should probably just reach out to an estate planning elder law lawyer and learn more than we can give you on the radio about how these irrevocable trusts work. I think you'll be amazed. Plus the guide actually has that in there as well.
We're going to go to our third caller here, Charlie in Osterville. You're on with Todd.
Hello, Todd.
Hi.
Over the last couple of years, I've been working on doing a lot of gifting and such to minimize my exposure to Massachusetts estate tax.
Okay.
I heard that there's also a new piece of legislation that if I purchase a property outside of Massachusetts, it's not considered part of my estate calculation for Mass. Is that true?
That's very true. So many people don't think that that's the case, but when you die in Massachusetts, if you're a resident of Mass, then property you own in another state is not taxed in Mass. So if I bought a vacation home down in Florida, but I live in Mass, when I die, that vacation home is not factored into my Mass estate tax. So for example, if my estate is worth $4 million, but the property I bought in Florida is a $2 million home on the beach, well, my estate for Massachusetts is $2 million, not $4 million. So, yeah, you don't have to be giving stuff away, and I don't think you probably should be giving stuff away. And so, does that help?
It does help. One other quick question. What is the decision point that you advise your clients to do a disclaimer on inheritance?
You mean someone died and you're getting the money?
Yeah, but you actually, I think the word is disclaim, or you basically don't accept it.
No. So, but what I'm asking is, I understand what it is. I just want to make sure we're on the same page. So let's say your mom died and your mom left you $2 million and you want to disclaim it. That's what you're saying. So, I think it's all going to be a function of how big your estate is. Remember, you may or may not want it. If your estate's already well over the federal exemption, I guess I don't want to be any wealthier, then maybe I'll disclaim it. But you got to find out where it goes when you disclaim it. It's not just that easy. You can't direct where it goes. So you'd have to look at their estate plan and say, I disclaim it, but the estate plan then will treat you as if you're dead and leave it accordingly into that estate plan. So be careful, make sure it goes where you want it to go. And again, if your Massachusetts estate is $4 million and you're married and you're getting more than that, I don't know what the number is that you would want to disclaim it, because remember, you might not have a federal estate tax, but you get a step up in basis. It's still your asset. Being a little bit in Mass isn't always a huge problem because the rate is lower. So random there on that one in terms of how much. But thanks for the call, and I hope that helped out a little.
Todd, thanks so much for the time this week. As always, we really appreciate a lot of great information there.
Always a pleasure.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing & Armstrong do not endorse each other and are not affiliated.
As we head to the bottom of the hour, markets are in positive territory. The Dow Jones up 85 points, the S&P 500 up close to about 0.5%, and the NASDAQ is up about 0.85%. Taking a look at some of the other economic indicators out there, the U.S. 10-year Treasury sits at 4.05%. We've got oil and gas sitting at around $65 a barrel, only down about 0.33% in early trading. That's all the time that we have for the first hour of the program, but we'll be right back at it, previewing Nvidia's earnings and much more right after this break. Stick with us on the Financial Exchange.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Have you saved enough for retirement? This is Mike Armstrong from the Armstrong Advisory Group. The advisors at our firm have 150 years of combined experience in the financial services sector, and they all work together to help you develop a unique financial plan that offers investment management, financial planning, tax strategies, and retirement planning. It's our goal to help you position your assets and give you peace of mind. Having a solid retirement strategy and investment plan becomes more important as you age, so visit us today at armstrongadvisory.com and sign up for a free free, no-obligation planning session. Just click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to ArmstrongAdvisory.com and let us develop a plan to help you secure your financial future. Again, that's ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Winter dates fill up fast, so if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches in crystal clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable, with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information, and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a new guide available this month titled Protecting Yourself or a Loved One from Elder Financial Abuse. Mike, when we talk about some of the new schemes that we're seeing that are unfortunately taking advantage of seniors, what are some of the more common ones that have popped up in recent years and months?
Yeah, I think whenever you see new emerging ones popping up, it's because something is getting a lot of attention in the first place. So, for instance, we have seen the emergence of more and more crypto-themed Ponzi schemes or frauds that are trying to convince somebody, for instance, that, hey, invest your money here and you can see massive returns over a short period of time. The person viewing it might have already heard about how certain crypto investments had returned a lot of money over a different period of time and assumed that it is legitimate when in a lot of cases it might not be. The other ones that you see, though, I mean, they run the gambit, but they often try and take advantage of someone's trust in an institution. So that could be trust in your bank. It could be trust in your local government. It could be trust in a financial institution like a custodian where you assume, hey, I've been afforded these protections when working with a major investment custodian or bank, so I'm sure I will be if I sign up for an account here or there. And while this is most common in seniors, it can take place in other places too.
Folks, the guide is titled Protecting Yourself or a Loved One from Elder Financial Abuse. The way to request it is by calling 800-393-4001. You can also request it at armstrongadvisory.com. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Estate planning is about more than just deciding who inherits what. It also shapes how your assets are treated over time. And that's a key point from the estate planning attorneys at Cushing & Dolan. Without a clear plan, an estate can face significant tax exposure, as well as long-term care costs that can put pressure on your savings. Trusts often play an important role in your overall plan because they can help address tax concerns and long-term care planning, while still allowing you to retain control during your lifetime. Cushing & Dolan have put together a guide called Back to the Basics, a complete guide to an estate and asset protection plan. It walks through how these planning pieces fit together and what to consider as you prepare for the years ahead. To get your free copy, call 866-848-5699. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Paul Lane and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Paul Lane and Marc Fandetti.
Markets continue to be in positive territory as we're an hour and a half plus into trading. The big focus for this afternoon will be Nvidia's earnings that are coming out after the bell today. We also had some earnings that come out from Lowe's and some other retailers this week, and also we've been shaking off some jitters from earlier this week with a tech sell-off around the concerns about AI, particularly some scrutiny being focused on the software sector, which has been down 25+% year to date. But we kick off this program with the preview of Nvidia's earnings, which had been really the primary focus for a lot of last year, was Nvidia and its bellwether position within the AI trade. The amount of revenue growth that they've been able to generate over the last few years have caused the company to swell to a size of $4.7 trillion in terms of market cap. What we're looking for the earnings that are supposed to come out this afternoon, analysts are projecting that they'll do anywhere from $65 billion to $66 billion for Q4 revenue. That would represent a growth of about 68% year over year. It's hard not to underscore just how tremendous this revenue growth has been for year after year after year, and it probably doesn't get talked about enough that they, unlike some other companies out there, can justify their valuation to a degree. They still trade at a pretty heavy multiple, but they've got the earnings to back it up, is what I'm going with there.
Yeah.
They make a lot of money.
Yeah. The better Nvidia does, arguably the bleaker things are for companies that AI will compress margins of. So the more, nobody should doubt that Nvidia will be a beneficiary of the data center build out and of AI permeating everything, as will other chip makers, presumably. But the more favorable the environment for them, arguably the less favorable for a whole bunch of other stocks that are going to arguably, and I'll I'll oversimplify here and say go away, because AI is going to effectively replace. AI is going to make what they do easier to do. It's going to reduce barriers to entry in those businesses. Software as a service, will be dramatically different if even a fraction of the promise of AI is borne out. So great for Nvidia and bad for a bunch of other companies, which maybe explains the overall flatness of the stock market for the past 6 months, which is not a bad development when you think about other ways that valuations, which we haven't even gotten into yet, could come down.
I was thinking of you this morning as I looked at forward PE ratios on the S&P 500
because you see them coming down a little, right? Valuations are looking a little. Now they're still hair raising,
right?
Go ahead.
But yeah, what has been of most focus for the market is, and we've talked about it a lot in this show, that valuations have been very high over the course of the last year or so.
Should we define that jargon?
Price to earnings is the most commonly used ratio out there, where you take the price of the stock relative to what it earns as a company. And usually when we're looking at this, we're looking at the S&P 500, so all 500 companies combined. What do they earn relative to what they're trading at? You then create that multiple where here is the price relative to the earnings of those contingency of companies. It had been trading at, on a forward-looking basis, as high as I think it exceeded 22 on a forward-looking basis. And if you look at a historical chart, we've only reached those levels back in the late 90s and then close to touching them in the 2021 era, where there was just tremendous amount of stimulus and market activity around the post-COVID period. But the positive thing, slight positive, those valuations those ratios have started to come down a little bit, because what we've had happen, and I talked about a little bit earlier, is earnings have continued to grow. We saw in Q4 13% growth in earnings for the S&P 500. That was 6 percentage points higher than anticipated. But as Marc just alluded to, the market has been flat over the last 6 months. And when we talk about valuations and saying they're high, the price to earnings multiple is high, that doesn't mean over the next 6 months that the stocks are going to go down. It's a lousy short-term predictor. However, from a longer-term perspective, usually it is a good barometer to assess what your future returns are going to be over an extended period of time. If you come off a high price to earnings multiple, price to earnings ratio, then typically your future earnings, you have to discount your expectations there a little bit. One of the ways that can get resolved is the negative aspect, which is the price goes down in the market and all of a sudden earnings look to be a more reasonable multiple, and investors don't love that. But the other way is earnings go up and the stock market doesn't go up with them. That's what we've seen. Again, a very small sample size, and it hasn't done a significant amount to correct the forward-looking ratios, but there has been some improvement there.
Yeah, what worries some observers is that very high multiples, much faster growth over a period in the numerator, the P, than in the denominator, the E, as you explained it. That's always been followed by a big downward adjustment in P, not a gradual upward adjustment in E. That's how PE ratios have normalized historically. When I say normalized, I just mean gone down, not necessarily that there's some magic mean average value, that is, that they regress, so to speak, to. But over the past 6 months, we've seen E creep up and P be flat, which is good if you're worried about high P to E ratios.
Like you said, usually is not the way things go,
No,
as many market observers will note, whether it's 2022 or you can go back further in history. Usually the price adjustments happen much more rapidly than a market staying flat for such a long period of time. It just takes a long time for earnings to catch up. But where we sit, now at this moment is looking ahead for Nvidia and its earnings at the close of the bell. They are the heaviest weighted component of the S&P 500, so it's always a significant area of focus for us as market observers because of the weight that they hold. I would de-emphasize some of their earnings significance a little bit. It does seem like there is much more of a hunt for winner and losers in the software space and other areas of the market, and how they're going to be impacted by artificial intelligence, and a little bit less scrutiny on Nvidia. However, there are some ways that if Nvidia comes out with perhaps weaker guidance or their gross margins come down more than anticipated, then you could see a bit of a sell-off, and maybe that trickles out to some of these other companies in the artificial intelligence space. But for the most part, it does seem like there are a pretty optimistic sort of guidance for Nvidia's earnings here, but we'll have to see what we come
Could
out
you
with.
argue, and this is a little bit mischievous, but I'll throw it out there because you follow these developments really closely. Could you argue that the more rapid the success in AI, the more disruptive it'll be for everything else? And it's hard to say what the net effect will be on something like a stock market index, which is just in a way, an average. Now, we talked in the last couple segments ago about how it's not really an average price. It's more of a weighted average price,
right.
But let's just call it an average price. Could you argue that what's good for Nvidia and AI could be bad for a whole lot else? Maybe the net effect will be a flat market like we've seen for the past several months.
I would make the argument that Nvidia's earnings are less of concern or less impactful
I'm not even...
than but let's say if Nvidia came in and knocked the cover off the ball and had revenue come in at $70 billion and exceeding the analyst expectation of 65 or 66, I don't feel like that would be a significant boost to the markets. What it seems like is more impactful now is the developments of Anthropic and all these software plugins, whether it be Cloud Code. I can never say that. Maybe I'll just stop doing it
What
all.
is it, Cloud Code?
Cloud Code, yeah.
Cloud
Code.
Like the name.
Cloud Code.
Okay.
Yeah.
But it's two words, Cloud Code.
Yeah, easier for you to say, not easy for me to say.
I'm just going slow.
Those developments seem like they have much more of a ripple impact for the near term on markets.
But that's just bad for a lot of industries.
It is, but I guess I would make the argument is that Nvidia is kind of not sitting on that perch of it being impacted because ultimately they're ones they're selling the chips that power the data centers, and so any development that happens with them, it seems like is not as significant as these product developments that we've seen that seem to have shaken markets a little bit more. To your point, causing this fear of future disruption in some of these established industries.
I'm just saying it's kind of interesting to me as someone who's really uninitiated in the specifics to think about, well, what are the impact for markets in aggregate, the economy in aggregate? Well, probably a positive for the economy overall. It should increase productivity in the long term. I'm not saying the economy will grow above its long-term trend rate necessarily, but it'll keep it chugging along. What does that mean for companies like those we've talked about today, software companies that are likely to be displaced?
That's
whatever AI ushers in.
That's what's the most fascinating is who is going to be
the winners and losers.
Displaced, who are the winners and losers? Because the thing with the market is it jumps to conclusions probably too quickly to try and decipher who those are. That's what makes it enjoyable every single day is there's something new coming out. We're going to take a quick break here on the Financial Exchange. When we come back, talking a little bit about another area of concern for the market that has been private lending and its impact. We're going to go over that and any concerns that the market has with that particular space in private credit right after this break here on the Financial Exchange.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network. Protecting your assets is the most important part of a sound estate plan. Cushing & Dolan's new guide called Back to the Basics, a complete guide to an estate and asset protection plan, can help. Learn how to avoid probate and address your estate tax concerns. Get yours today by calling 866-848-5699. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Financial life is more connected than ever. You likely have online accounts, digital payments, automatic transfers, and that connectivity can create risks if you aren't careful. Hi, this is Chuck Zada from the Armstrong Advisory Group. Elder financial abuse doesn't always involve a scam call. It often starts with small changes like unfamiliar transactions, new names on certain accounts, or someone quietly taking on more control than they should. One of the most important planning steps isn't about investments at all, it's about clarity. Our new guide is called Protecting Yourself or a Loved One from Elder Financial financial abuse, and it covers practical tools like account alerts, trusted contacts, and how to structure powers of attorney. To get your free copy, call us right now at 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Winter dates fill up fast. So if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches, in crystal clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable, with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information, and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3. That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up, because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit GoRedForWomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
Well, the Financial Exchange streams live every day on YouTube. Subscribe to our YouTube page and follow market activity all morning long, only here on the Financial Exchange Radio Network. Just search the Financial Exchange on YouTube and hit that subscribe button. Time for trivia here on the Financial Exchange. And on this day in 1862, the first Legal Tender Act was approved by U.S. Congress, authorizing the United States notes into circulation. Everyone knows the denominations that are still being printed, but some of the high-value bills from the early part of the 1900s are still legal tender, although out of circulation. So our trivia question today, what is the highest denomination dollar that is legal for public to use? Once again, what is the highest denomination dollar that is legal for the public to use? Be the fourth person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the fourth correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Private equity was headed for a correction even without AI gloom here, a piece from the Wall Street Journal. So this is specific to the private equity sector in general, which had had a tremendous run-up, really peaking around late 2024, early 2025. And private equity is just another way for investors. Usually it would be endowments, pension funds, really wealthy families that allocate capital with these private managers that will go look for opportunities that are not available to you and I on the public markets, unlike the idea of buying Nvidia stock or Coinbase or whoever you want to say. this is a space that had a tremendous amount of capital that was flooded into it. The piece that covers the subject of private equity here in the Wall Street Journal is mentioning how the valuations in some of these private equity companies had reached a peak and now are starting to trade more in discount territory, because the way that they feel that these private equity companies should be valued is more on a basis of their fee income rather than just what they are trading at within the publicly traded markets. There are some of these private equity shops that are publicly traded that you can purchase and become a shareholder in. It's a space, Marc, that I don't know if it has as much outsized impact to many of our listeners or investors, but it is an area that has seen perhaps some froth and some sell-off because of some of the lending that was done in the software space.
Yeah, but it's just, I don't want to sound naive. I mean, there might be big problems lurking, but it's a very big asset class or investment type.
Right.
Much bigger than privately owned companies, are far more numerous and bigger, no matter how you care to measure them, than publicly traded companies. There are tens of thousands of privately owned companies. Private equity is one way for, like you said, institutions with the ability to evaluate a private equity manager, because unlike with a public market manager that you could access, say, through your 401k plan, a private equity manager won't tell you how they're going to deploy your capital. You first tell them how much you want to commit to them. Then they call that amount gradually over time as they find opportunities. So you don't really know what they're going to invest in. You're betting on their past track record. So it's different in many ways than public equity. It's similar in that it gives you the opportunity to participate indirectly in the growth of the economy over time, because if the economy does well, companies will do well, public and private, and the earnings that result will accrue to shareholders. But it's opaque in the sense that you don't know what's going on.
Yep.
It's illiquid in the sense that you can't sell your interest right away. There are ways to sell an interest, but it's usually at a steep discount.
Yeah, it's nowhere near the liquidity that a regular market, a publicly traded company would have, where you could be out within any given day. So that's one side of it, is the private equity side, but also there is the private credit side too, which has been a lot of area of scrutiny, where private credit has picked up a tremendous amount of steam, really post-financial crisis, the whole period in the last 15, 20 years, it's really seen to grown significantly. Part of that is some of the larger financial institutions, the JP Morgans, the Bank of Americas, the Goldman Sachs, started to be, one, because of government innovation, just more scrutinized in terms of who they could lend money out to. And so that created a area where private credit could step in and provide lending to small companies or mid-sized companies. And as a result, it became a very profitable and successful area of the market. Also helped by the fact that we had very low interest rates for that period of time, but now has reached a point where there's been, perhaps as Jamie Dimon has been quoted a million times, there are some cockroaches or some areas of lending that weren't the most disciplined. And Blue Owl has gotten a lot of scrutiny as a publicly traded company that has a lot of lending out there. Recently made a change where they changed the liquidity on some of their funds, barring some withdrawals, selling off some loans to try and pay off investors from older funds. So they have been in a tremendous amount of scrutiny. Their stock has been down significantly since all of these private credit concerns have sort of picked up.
Yeah, for an individual investor, as you suggested, this so-called asset class is not really accessible. There are some 401k plans, big sophisticated ones, that include them in very diversified portfolios. So the illiquidity drawback, it's not really a drawback. It's what allows private equity managers to buy a company, to take time to fix it up, and then sell it. That takes years. They're very active. Like, you think of Peter Lynch as an active manager because he buys whoever owned pantyhose or whatever his favorite example was from the 1980s. And he holds it because he thinks it's going to be a good company based on his experience as a shopper. Like, we think of that as active management. What private equity managers do is really active.
Roll up their sleeves and get involved
They
with
buy,
the business.
they operate, and they bring in a crew. They fix a company. They find out what was wrong, so to speak. They use more delicate language than that, obviously. They fix it up. They increase the amount investors are willing to pay for it, and then they send it on its way into the wild of public markets for huge profits. Arguably, in fact, probably undeniably, a huge value added to the economy.
Yeah. Taking a look around at markets still in positive territory as we await Nvidia's earnings at the close of the market today, with the S&P 500 up close to 0.2% and the Dow Jones up over 200 points. We're going to take a quick break here on the Financial Exchange. When we come back, more on the markets with Wall Street Watch and the answer to our trivia question right after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Winter dates fill up fast. So if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches in crystal clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John. 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information. And get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com.
Life changes quickly as we age. Technology is moving faster and is creating new risks for families they didn't have to worry about before. One of the biggest is elder financial abuse. Hi, this is Mike from the Armstrong Advisory Group. I'm not talking just about scams, but situations where more online accounts, digital payments, and shared access can slowly open the door to problems. Today, financial exploitation doesn't always look obvious. It can show up through unfamiliar transactions, misused powers of attorney, or pressure from people who already have a role in someone's life. That's why the Armstrong Advisory Group put together a new guide called Protecting Yourself or a Loved One from Elder Financial Abuse. To get your free copy, call 800-393-4001. That's 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, it's a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, it's Nvidia Day, and markets are in positive territory as investors await the significant earnings report from the AI and chip giant due out after today's closing bell. Right now, the Dow's up 0.4% or 198 points. S&P 500 up 0.6% or 43 points. NASDAQ up just over 1% higher at 229 points. Russell 2000 is off 0.2%. 10-year Treasury yield flat at the moment at 4.042%. And crude oil down over 0.33% lower, trading at $65.39 a barrel. Lowe's beat forecast for its fourth quarter earnings and revenue as the home improvement retailer's sales grew more than 10% year over year. However, Lowe's noted it was seeing pressure from economic uncertainty and a frozen housing market, sending shares down by over 4%. Meanwhile, HP also beat quarterly earnings expectations. However, the computer maker warned that its annual results would be near the low end of prior guidance, partly due to rising chip costs. That stock is up by over 1%. Elsewhere, TJX reported stronger than expected quarterly results, but guided for growth to slow slightly in the coming year. TJX shares are up nearly 1%. After its 14% tumble yesterday, Whirlpool stock today is trading modestly lower after David Tepper, billionaire founder of hedge fund Appaloosa Management, sent a critical letter to the appliance maker's board accusing the company of destroying shareholder value and called for sweeping changes to its strategy and leadership. And Workday shares are now rebounding after trading lower to open the day, after the AI-powered workplace platform disappointed with its first quarter subscription revenues outlook, adding fuel to AI concerns. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question. What is the highest denomination dollar that is legal for the public to use? That would be the $10,000 bill. John from Knoxville, Tennessee is our winner today. Listening on iHeartRadio, is taking home that Financial Exchange Show t-shirt. Congrats to John. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Tax receipts are up, which means inequality is too. A piece here from Bloomberg in which it talks about the rise that we've seen in tax revenue, largely driven by those people in the top 1% of income distributions. According to this report from Bloomberg, 45,404 tax returns reported incomes of $10 million or more, and that accounted for more than 30% of the overall increase in individual income tax revenue. And Mark, this mirrors stories and subjects that we've discussed before, where there has continued to be this large chasm between those who have and are earning very strongly, the top 10% of income earners, or the top 1% in this case, versus those people on the lower to middle end of the income spectrum just haven't seen the prerequisite income growth to keep up with the inflation that we've seen over the last 4 or 5 years ago. And that's why we're seeing that increase in tax receipts there, is because those people on the top who pay a bulk of the taxes are earning more, and as a result contributing more to the revenue from a tax perspective.
Yeah, this type of statistic that shows an increased amount of income going to the top whatever percent. It irks some people because higher proportions of overall income being earned by a smaller proportion of people is sometimes associated with, I'll just say, greater economic instability, volatility, and ultimately lower growth. That could be because greater concentration leads to populist policies that slow growth down. Government starts to interfere more in the private sector. That is generally not good for growth. Some regulations obviously can be conducive to it if they correct things that the market is not doing, I'll just say optimally. You could just think of that as good. Other times, government goes too far. It usually goes too far. So this is worrisome in the sense that it could lead to, and we're already seeing it. We're seeing presidents from both parties interfere more in the private economy. The current administration has bought shares in something like 12 to 15, or demanded shares. Extorted is frankly, and I don't think I don't mean that critically, but they've said to companies, "You want to do this deal? You're going to give the United States a share of your company. That's the price." You may think that's good or bad. What you probably can't deny is that that's not exactly the free market capitalism that we associate with heady rates of growth. It just isn't. Anti-free trade policy. This administration is an extreme example. Last administration did it too. Generally associated with less open economies, generally grow slower. So I guess one worrying consequence of increased concentration, I'll just say wealth, even though we're talking about income here, could mean more populist type policies that'll slow growth. Well, growth won't go to zero, and you won't know that it happened because you don't see the alternative history. We can't look at an alternative universe where they elected a libertarian president who opened markets and so forth, and see how fast the economy grew or didn't under that guy. So we'll never know.
Yeah, it is something that is of concern, that you feel as if the further divergence that we've seen, and there's been some arguments made that perhaps with artificial intelligence that maybe that just exacerbates it even further, that will cause issues with the population demanding for, like you said, more of those sort of populist policies that may not be good for the economy.
I mean, is there in your view, is there a more optimistic take on AI permeating everything, making tools available to people that previously didn't have access to them in all walks of life?
That's a great question to pose, and something that Mike and I were kind of kicking around the show yesterday, where you could argue that with the advent of the internet, that basically now everyone who has a mobile device has access to slews of information that they never would have previously, 20 plus years ago. And the argument that's being made with artificial intelligence is now eventually you'll get to a point that everyone will have access to a significant, sophisticated intelligence. Intelligence will get commoditized, and that everyone will have more access to it. Does that benefit the greater good? I don't know the answer to it, but I have a little skepticism that I feel like perhaps more of it will benefit companies that harness it, and less benefit will go to the end user. But the argument has been made in the past that ultimately it is the end user that benefits the most from this these revolutions, is that it's the individual that benefits from more competition, cheaper pricing, more readily available access to information and goods. I don't know. Where do you sit on the side of the
I don't know.
debate?
I was hoping you had a clear answer that I would give, to be honest.
I don't, but it's
I don't know.
It's an interesting question.
Yeah. You don't have to. It's not preordained that inequality will continue to grow. If it does, is that inherently bad? I don't know. Again, there's some evidence that it's associated with slower growth if you look at a cross-section of economies over time. And some of it, I guess, just seems, there are some people who just think it's unfair. I'm not in that camp. I'm a believer in you should be able to accumulate as much wealth as you like. There are a lot of people who disagree with that,
right?
Particularly here in where we're broadcasting from, probably Massachusetts, where we think it's a good idea to tax higher incomes at a higher rate. Now, that's normal at the federal level, but we have a graduated tax at the state level as well. I guess you could call it graduated. Tax. It leaps up.
Yep. We're going to take a quick break here on the Financial Exchange. When we come back, a little bit of Stack Roulette right after this break.
Smart financial talk whenever you want. Find the Financial Exchange on YouTube. Hit that subscribe button and keep up to date on daily business news from New England and around the country. This is the Financial Exchange Radio Network.
Financial life is more connected than ever. You likely have online accounts, digital payments, automatic transfers, and that connectivity can create risks if you aren't careful. Hi, this is Chuck Zada from the Armstrong Advisory Group. Elder financial abuse doesn't always involve a scam call. It often starts with small changes like unfamiliar transactions, new names on certain accounts, or someone quietly taking on more control than they should. One of the most important planning steps isn't about investments at all, it's about clarity. Our new guide is called Protecting Yourself or a Loved One from Elder Financial Abuse, and it covers practical tools like account alerts, trusted contacts, and how to structure powers of attorney. To get your free copy, call us right now at 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Winter dates fill up fast, so if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches in crystal clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable, with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John. 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information. And get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com. Protecting your assets is the most important part of a sound estate plan. Cushing & Dolan's new guide called Back to the Basics, a complete guide to an estate and asset protection plan, can help. Learn how to avoid probate and address your estate tax concerns. Get yours today by calling 866-848-5699. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3. That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Follow the Financial Exchange Show on Instagram and see what's driving the conversation about Wall Street and economic trends. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. The DAV 5K raised over $150,000 last year, but we still need your help. You can support our great American heroes by visiting DAV5K.Boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at DAV5K.Boston. That's DAV5K.Boston.
It's now time for Marc's favorite part of the program. So much so that he almost ran off on us. And secondly, he has his coat. So I think he's really ready to go for our concluding.
I have to move my
segment.
car. That's thus the urgency.
That's
I may be in a handicapped spot or some other reserved spot.
You got the hazards on? Is that
someone,
sort of the
someone get
job?
the local PD over here. It is time for a little bit of stack roulette, which Marc, I will let you bat lead off for, unless you want me to lead off because
no, mine's going to be
you're
brief.
Looking
mine's
for your
gonna
keys.
Mine's going to be. Wow, just gratuitous. Yeah.
Did you warm up the car though? In all seriousness, is the car getting warmed right now?
No.
Oh, no.
I've only been here for like 3 hours.
Do you have the remote starter?
No, I don't have. No, that.
My wife's
that
car has
cost
it. Mine
extra.
doesn't. Yeah, my wife's car has. I do not.
That's one of those things where during the purchasing process you think I don't need it. Then a year later, you're kicking yourself
It's
for not
so
having
nice.
spent the $200.
Yeah.
You guys run into that when you buy a car. I don't need the sunroof. I don't need.
I
heated
push
seats.
against everything because I
Right?
think
And
they're
then a
getting
year
some big
later,
commission on it.
You
and
wish
I'm
you'd
just,
spent the money.
Yeah, exactly. Because
Yeah,
you're
I'm-
just exhausted from the sticker price. It's
Yeah.
already stunning you as much as it is that you're going to spend thousands of dollars on a car. So that last push to spend $200 or $500 more, I'm always in the position of
exactly
no
it.
moss, no more. I can't take it anymore.
But then
That's
I regret it within 3 to 6 months. Why didn't have you ever? I find that's a pattern with me. Is that weird?
I haven't because the insurance ones that they kick, like the tire insurance package or like the lost key one. Those they push those at the end.
Yeah.
I haven't regretted those because
No, I'm
it
talking
hasn't
about like little extras. Like, I really
the
wish
bells and
today I
whistles.
had a heated seat, or I really wish I had
the
remote
starter.
start.
The starter would be great.
Yeah, you can always have that put in aftermarket. I guess it's not a big.
Is it?
I don't have
with
huge-
any car you could just
you could go
do
into
that?
any.
The remote start?
Yeah,
Sure. Anybody
anyone
can
you
do
could
a
add
remote
it.
start
Yep,
for you.
regardless
I
of
did-
model.
I did that once,
Yeah.
Right?
back in the day.
Yeah, aftermarket. Yeah, there are guys who do that very.
I think it was like
confidently.
$250 to do it aftermarket. Like, it wasn't that bad.
No,
That may be worth it.
yeah,
That may be worth it.
it's just one of those things that you realize later. I should have spent the extra several $100. Now I'm regretting it.
What blows me away is we have a parking garage here at the office building. Why everyone doesn't park there? There's still a slew of cars that park outside in the. Are you on the Elements?
I mean, yeah.
Why?
Yeah, like, why don't you use the garage?
I don't know, guys. Maybe we could take this offline.
No.
It's perfect time for this.
But it's just like
I like exiting my car 10 steps. I'm in the building. I don't know. The garage seems farther.
yeah, but it's warmer.
Better, a little better for the car. What are we talking about?
Just
and why is
just an
everybody ganging
observation.
up on
I'm
me
not
today?
ganging up on you.
I'm being pretty agreeable today. I haven't laid into you about tariffs, or I can't do
haven't
anything
brought
right
up-
today.
no,
Maybe I had this coming because I did park in an unauthorized spot. Maybe I had this coming. So my quick update, my contribution to Stack Roulette, so you don't bust my chops Friday or whenever you and I are next paired here. You know what? It's we got 4 minutes. You go with yours. I bet it's better.
All right. Robots have been all the talk.
Oh, no, mine was better.
Have been taking. Robots have been trying to take jobs for the last 100 years. Is a piece here in the Wall Street Journal, basically talking about. There was a tremendous amount of focus with the new administration on bringing U.S. manufacturing jobs back to the United States. What's argued in this piece in the Wall Street Journal, and this is not the first place to make this argument. We've talked about this on the show too, that the labor costs for employees in the United States to do manufacturing jobs are far greater than those in China or other areas where goods are manufactured. That far better strategic pivot would be to try and focus on the use of robotics domestically here rather than building out the manufacturing force, because it's just going to be so difficult to compete on a global level compared to the lower labor costs that some of these other countries are able to have a big advantage on. Of course, robots come with, first of all, there needs to be more innovation there. There has been a lot of progress. A lot of warehouses now are using them to move around materials, but for smaller companies, it can be challenging to incorporate those into their business. But that truly, if you want to make the big push for more manufacturing in the U.S., that would be a way in which we could establish more of a presence. And it only became an area of greater scrutiny when you had China, curbing its exporting of rare earth metals and just all of the trade war concerns that have loomed over the last few years or so.
Yeah, generally when we've automated something, labor has adapted so that it becomes complementary. It's made us more productive.
Mm-hmm.
So it will replace some jobs, but it's wrong to think about the economy as comprised of a static number of workers with static skills. They'll retrain and they'll supervise robots or become robot programmers or whatever. The kind of classic example is the self-checkout.
Right.
It did replace some need for cashier work, but those people have been retrained over time. It's been decades since, obviously, barcode scanners became pervasive. They've been retrained not only within the supermarket, but within other industries. So,
You've always quoted a statistic where the amount of manufacturing workers in the U.S. has declined, pretty precipitously, but the productivity has held.
We make more hard
Right.
stuff. We make a lot more hard stuff, and I forget what we make. I'm not going to try to remember, even though it's dramatic and a nice example. It's something that we make 50% more with 80% fewer workers.
Exactly.
Relative to 70 years ago or something like that.
And that's what the push needs to be going forward.
You can't fight it, right? But I mean, companies are going to adopt these technologies. Right. Their shareholders, and that's all of us through our 401k plans, demand it. So you can't, out of one side of your mouth, say, I love the returns in my 401k plan. Out of the other side of your mouth, lament the productivity enhancing innovations that have allowed us to realize those returns. So fighting it is probably, I was going to say a fool's errand, that's a little bit unkind, is probably ill-advised. Better to focus on getting retrained.
There was an argument where
that sounds really naive. I'm sorry. That sounds stupid.
The longshoremen were striking in the ports, I believe in New Jersey and New York a few years back, and they were arguing their newest union deal that they wanted language in there that companies would invest in automation and further development of business. And that's where to echo that point, it's you have to allow business to continue to develop and be more productive. You can't just stop at the horse and buggy and say, we're going to stay put.
And technology is no different than free trade. When you buy something abroad because it's produced relatively less expensively, whether it's cheaper labor abroad or better technology, you're effectively importing technology. I'm oversimplifying a little bit. So fighting free trade is a little bit like fighting technology in that you're only making yourself a little bit poorer in the long run.
What do you got for
Well, it was trade related, actually. I thought tariffs were set at 10% across the board for the next, 150 days?
They're going to try and gradually increase them to 15%.
Oh, well, I thought that was news. When did you hear that? Okay, well, I just noticed. I was glad we had a little bit of tariff stability, possibly for a while, but no, now they're teasing a 15% rate where appropriate is the way the administration is conveying. So more tariff uncertainty, Paul, was the upshot for me.
Where that's trended is over the weekend, President Trump mentioning that the global tariff rate would climb up to 15% on Tuesday night. It went in at 10%, but they're trying to formalize some sort of edict that would get up to 15%.
But not for everybody. They're qualifying it with the where appropriate language. So
also,
once again, we don't know.
If you're falling under not the NAFTA agreement, but the new structure within Mexico and Canada and the U.S., you'd be exempt from them. So there were some carve-outs there. But we will continue to keep you apprised of those tariff changes as they come about. That's all the time that we have for this episode here of the Financial Exchange. Markets in relatively positive territory, as we'll have Nvidia's earnings after the bell, and we'll be covering that first thing tomorrow on the show. Thanks so much for joining us.